Hello there and welcome to the Hashpower Academy. My name is Jacob Scanlan. I'm the lead educator here at the Academy, and this is a place that we delve into anything and everything about Bitcoin that you wish to learn, want to learn, and how to learn it. So we delve into Bitcoin from a fundamentals first perspective, delving into the different aspects of energy production, compute and Bitcoin mining, which transcends energy and exports it to the internet to produce blocks of Bitcoin, a timestamp server issuing a full supply of 21 million database units we call Bitcoin, data money. And so the context of today's video is the IOUs called MicroStrategy shares and how they have an underlying Bitcoin per share associated to them. We're going to look at the different pricing comparisons between the shares and the Bitcoin per share NAV value, and also that time-derived understanding of what is the long-term value potential of Bitcoin and thus also MicroStrategy. So let's get stuck in. The first thing to understand is that they're no longer called MicroStrategy. It's now strategy because there is nothing micro about their Bitcoin purchases. They currently own something like 499,000 Bitcoin, which is nuts when you think about it. And the first thing to understand about this is if they own 500,000 Bitcoin and the full supply is 21 million, and a lot of that Bitcoin's been lost as well. Well, this company have a first class front row seat to the spaceship that is Bitcoin, and all of this underlying compute and energy aspects of infrastructure and commodities and all these other different value propositions that Bitcoin will offer now and into the future. Well, this one single company is going to hold a significant share of all of that value potential. And this is to say that everything to do with the expansion of Bitcoin in the energy sector, of being able to stabilize grids, price the electricity in Bitcoin, monetize the continual build out of more renewables, non-renewables, and off-grid as well, the construction of more grid infrastructure, the deployment of more Bitcoin mining hardware that produces heat and that can be used in pools and schools and greenhouses and everything in between, and monetizing the microchip production line to innovate and make microchips and transistors more dense. And all of this compute power, the world's most secure, network infrastructure and communication system that ensures that these blocks are being added with a cost to produce. And that is the unique value proposition of the Bitcoin blockchain, or time chain, shall we say. Because as more compute is joining the network, the blocks may get faster and get produced quicker than 10 minutes. And so it raises that security level, the difficulty adjustment, as to how hard it is to produce Bitcoin. And that creates a pricing system. The amount of Bitcoin earned per day gets priced against the 17 gigawatts of power constantly chasing the next block in the chain. But why is this all important in the context of MicroStrategy? We'll delve into that now. So, energy, space, and time. Yes, it's very cliche, but it's a good way to just conceptualize what MicroStrategy are doing and how they're doing it and why people are buying into their shares and what the long-term value proposition is over time. So there's about $140 worth of Bitcoin per strategy share. And the share price is trading at, say, 280. So the NAV is, well, half the share price. And so the shares are trading at a 2x premium. So if you held one Bitcoin and you sold it to buy MSTR, your share price would be the dollar equivalent of the share value would be the dollar equivalent of the Bitcoin, but you would only have half a Bitcoin per your share amount. So why would you do that? Why would you sell a Bitcoin to buy into shares that trade at half the amount of Bitcoin per share in underlying value? Well, this is because of the time component that MicroStrategy and Michael Saylor are taking on debt. So they borrow $1 billion, buy $1 billion worth of Bitcoin, And as that appreciates, they can capture that difference. And they're continually cycling more shares, capturing that premium, and cycling it into buying more value. And that ability to accumulate the Bitcoin per share is something we call accretive dilution. That is to say that if you own X amount of shares, your percentage of the company, as they continually issue more shares, gets less. So you start owning a smaller percentage of the company, but the shares that you hold have a greater quantity of Bitcoin per share. Accretive dilution. It sounds paradoxical, but everything in this Bitcoin space is very paradoxical. And then this time component of the long-term value proposition of a fixed supply data energy derived monetary unit with energy and compute expanding underneath it, with heating systems as one direction, carbon accounting as another, and all these other different pieces, that all of these other layers of the network, the technologies and the commodities, are continually inflating and expanding under 21 million units. And if 500,000 of those units are owned by this single company, that value proposition of cycling all of this volatile premium into more value per share, well, that's going to have an interesting value proposition into the future. But there's also another component we haven't discussed, that MicroStrategy want to go in the direction of Bitcoin banking. Now, I personally believe that compute power is the most fundamental commodity to a banking discussion when it comes to Bitcoin. Why? Because how is Bitcoin issued? Through compute power. How is it settled? Through compute power. So essentially, compute power is Bitcoin's mama, because it produces and settles all transactions of the blockchain by finding the blocks. Because you either pay to play, you pay to store your transaction data in a block, or you produce the blocks yourself. Issuance and settlement are that banking and settlement layer when it comes to the context of Bitcoin banking. So that's my thoughtful takeaway as to how the longevity of their value proposition is not going to be in a dollar-derived world, but more so in an energy and compute side of things. And this is another interesting concept, that the way that MicroStrategy are capturing share premium and cycling it back into Bitcoin to dollar value, which is actually a premium in of itself when you contextualize it to Bitcoin mining. Why? Because Bitcoin miners produce Bitcoin at a discount. If their production costs of the electrical bill means that for every $1 of energy they spend, they produce $2 of Bitcoin, their production cost for Bitcoin is about 50%. This is to say that if they spend $40,000 on electricity to produce an $80,000 Bitcoin, well, Bitcoin to dollar is their premium. And the underlying conversion exchange rate from electricity into Bitcoin from the mining side of things, that is an approach of producing Bitcoin and capturing the Bitcoin to dollar price as a premium. So it's the same approach that Strategy are doing with converting into Bitcoin premium. Well, they're both premiums is what I'm trying to say. So that's a different sort of topic we can delve into in another video. But the time aspect of things, the borrowing of money is piercing a hole in the debt money system. And truly, I believe that the debt money trust model is going to be changed. We're going to swap it to truth, a storage system of absolute truth, the layer 1 blockchain. And all the different other layers that are going to come, they're just expansively creating more space for transaction velocity, but having net settlement down to that blockchain layer, as we talked about before in the perspective of a Bitcoin banking system. Again, another topic for another day. So I hope you enjoyed this video. My throat's going, but I'm going to keep churning out videos as I can because I want to push out value into this digital world of YouTube and everything else and in between. So like, subscribe, share, send it to the group chat, and I will see you in the next one. Goodbye.